Hello everyone, and welcome to Accounting with Yana. Today we're going to talk about the chart of accounts, one of the most important parts of the accounting system, but also one of the most overlooked. We will also look at a real-world example of how poor chart of accounts design can create problems for management and accountants. A chart of accounts is a structured list of all accounts a company uses to record financial transactions. It organizes accounts into categories such as assets, liabilities, equity, revenues, cost of goods sold, and expenses. In simple terms, the chart of accounts determines how financial information is organized and how it ultimately appears on the financial statements. Every transaction recorded by a company flows through the chart of accounts. If the structure is poorly designed, the financial statements may still look professional, but the information inside them may not be very useful for analysis or decision making. That affects the income statement, the balance sheet, and the statement of cash flows. By the way, if you need a refresher on financial statements, I have a separate video explaining them. I am posting the link here and in the description below. A well-designed chart of accounts helps companies produce more useful reports, reduce classification errors, simplify reconciliations, and improve financial analysis. It also makes audits, tax preparation, and year-end reporting significantly easier. Now, let's look at a real-world example of what can go wrong. Assume a company uses only one account called marketing expense to record online advertising, trade show costs, promotional giveaways, website management fees, and social media consulting. Technically, the transactions are still being recorded correctly. Total expenses are not understated or overstated. However, management cannot easily determine how much the company is spending on each type of marketing activity. For example, the company may want to know whether trade shows are generating better results than online advertising, or whether marketing costs are increasing because of website expenses or social media campaigns. But because everything is combined into one broad account, that analysis becomes difficult. As the business grows, management may need to spend significant time reviewing invoices and reconstructing information that could have been available immediately with a better chart of accounts design. And all of this started with one issue: accounts that were too broad and not properly organized. Good planning at the beginning would have prevented all of this. The good news is that building a chart of accounts correctly from the start is not difficult. It just takes a little planning. In my next video, I will walk through how to set up a chart of accounts in QuickBooks Online. If you found this video helpful, please subscribe, like the video, and turn on notifications so you don't miss future accounting and QuickBooks tutorials. Thank you all so much for watching, and I hope to see you all again in the next video.